All right, welcome. Today we're cracking open a pretty controversial trading system, often just called CU. We're going to look at its whole philosophy, the exact entry models it teaches, and the kind of mindset you need to even attempt it. This is all coming straight from the playbook of the system itself. So let's jump right in. The whole system really starts with this one big question. What if everything you see on the chart, every up and down, isn't random chaos? What if it's actually a carefully crafted story engineered from start to finish? This idea completely flips the script on what most people think about how markets move. So, according to this philosophy, the market is not a fair game. Not at all. It's basically a battlefield. On one side, you have the smart money, this tiny group of market makers who are supposedly pulling all the strings. And on the other side, you have what the system bluntly calls dumb money. And here's the crazy part. Dumb money isn't just you and me. It's pretty much everyone else. Banks, hedge funds, big institutions, they're all in that same boat. To really hammer this point home, the source uses this pretty intense analogy. It says, us as retail traders, we are nothing but fleas on the dog's back going for a ride. The message here couldn't be clearer. You are not the one moving the market. Your one and only job is to figure out which way the dog is running and just hang on tight. Okay, so if the market really does have a script, then what does that script actually look like? That brings us to our first section, decoding the market's rhythm. The idea here is that price action isn't just a bunch of random noise. Nope, it's a predictable, repeating rhythm over and over again. And here's that rhythm broken down into a super simple three-step cycle. First, you get consolidation. Price just chops around in a range, building up orders. Then, stage 2, you get what's called a turtle soup. This is a sharp, fast move designed to trick everyone. It stabs above or below the range to grab all that liquidity. And finally, that grab fuels the real move, the trend. And then what happens? The whole thing starts over. Range, grab, trend. That's it. So how do you actually read this rhythm in real time? Well, the system has a core framework for this called candle range theory, or CRT. And really, it's all about simplification. Instead of worrying about a million different things that could happen, it says that for any candle on your chart, the next candle can only do one of three things. And here are those three things. It's actually pretty simple when you see it laid out. Compared to the last candle's high and low, the next candle is either going to wick past that range, that's your turtle soup, or it's going to keep trading inside the range, that's your consolidation. Or number 3, it's going to break out and close outside the range, that's your expansion. And the whole point of the system is to get really, really good at figuring out which of those 3 is the most likely to happen next. All right, so theory is great, but how does this actually turn into a trade you can take? That's what section 2 is all about. We're getting into the how, the 3 specific core entry models that are the heart of this entire system. First up, we've got model number 1. Let's call it the thick candle reversal. This one is all about spotting a very clear, very visual pattern that often signals a big reversal is about to happen at an important level. Now, the rules for this are super specific. First, you find a major old high or low on your chart. Step 2, you wait for a big, obvious candle to just blast right through it. But, and this is the most important part, step 3 is the signal. Price has to fail and close back inside the range of that big candle. The moment it does that, on that close, that's your entry. Okay, model number 2 is called the true market structure shift. This one's a little more complex. It's not about just one candle. It's designed to help you spot a deeper, more fundamental change in the market's direction. So here's how it works for a bullish shift. First, price makes a low. Then it makes a high. Then it drops and makes a lower low. Now here's the magic moment. If price then rallies and breaks decisively above the high that created that final low, boom! That's your confirmation that the trend has likely shifted. Your entry usually comes on a small pullback right after that big break. And that brings us to the third and final pattern. This one has a pretty dramatic name, the kiss of death turtle soup. And the name tells you exactly what it's for. It's basically your last chance to jump on a move right before it hits its final target. So yeah, this isn't just any old turtle soup. The source says this is the very last fake out before a big price objective gets hit. For a move up, it'll happen way up in the top quarter of the range. For a move down, it's in the bottom quarter. And a cool little detail, a lot of the time you'll actually see a tiny model number 1 pattern form right inside of. So we've got the patterns, we know what to look for, but the system is crystal clear that what you're looking for is way less important than when you're looking for it. And that brings us to section 3, the absolute critical element of time. This right here is one of these central mantras of the entire system. Time is more important than price. Think about it like this. You could have two traders who both buy at the exact same price. One of them enters at the right time, the other at the wrong time. One makes a profit, and the other gets stopped out. Same price, totally different outcomes. The time of day gives the price all of its context. So how do you structure time? You do it with something called kill zones. These are just specific windows during the day, all based on New York time, where these high probability setups are most likely to show up. The Asian session kind of sets the board. Then London comes in and often makes a big, decisive move. And then New York can either continue that move or reverse it completely. And if you zoom out even more, this system gives a specific job to each day of the trading week. It's framed as the market maker's weekly schedule. Monday is for building up a range. Tuesday is for a fake-out move. Wednesday is often the real big trend day. And then Thursday and Friday tend to wrap things up. It's like the whole week follows a script. Okay, so we've covered the worldview, the patterns, and the timing. But the final piece of this puzzle, and according to the source, probably the most important piece, is the mental discipline you need. So let's get into Section 4, Mastering the Mental Game. To succeed with this, the source says you have to completely detach yourself from the money. The core belief is simple. The less you care, the more you'll make. You have to accept that losses are just part of the business, like paying rent. You ignore the news because the chart already tells you the whole story. And most importantly, when it's time to click the button, you have to be a robot. Zero emotion. So how in the world do you become a robot? The answer is simple. Repetition. Insane amounts of repetition. The source material says flat out that you need to practice and back-test these models 10,000 times. The goal is to drill these patterns into your brain so deep that you don't even have to think. You just see it and you act. And that brings us all the way back to the beginning. From the core idea of how the market works, to the specific entries, to the psychology, this system lays out a complete, if pretty intense, code for the market. And it really just leaves every trader with one final question to ask themselves. Is my strategy working with the people who engineer the market, or am I just another flea along for the ride?